Okay, that is financial accounting. We discussed topic is accounting principles. So accounting principles means what? Accounting principles are those rules and regulations which are followed by the accountants at the time of recording the accounting transactions. So we completed the topic is accounting concepts. What are the accounting concepts? Accounting concepts are separate entity concept, going concern concept, money measurement concept, cost concept, real aspect concept, accounting period concept, and matching concept, and last is realization concept. So these are the several accounting concepts. Now accounting conventions. Under this part of accounting principles are divided into two types now. So what are that is, one is accounting concepts and accounting conventions. Now the topic is accounting conventions. Accounting conventions. Accounting concepts means, so that accounting is based on few concepts which follows assumptions or which follows rules for regarding the transactions. So that is an accounting concept. Next is accounting conventions. Conventions means what? Those rituals and practices which helps the accountant in the preparation of accounting statements. So these accounting conventions are helpful in the preparation of the accounting statements like final accounts. Okay, so these accounting conventions involves those which helps the accountant in the preparation of accounting statements. Okay, see here what are the conventions are. First one is convention of conservatism. Okay, convention of conservatism. Second one is convention of full disclosure. Next is convention of consistency. Convention of consistency. Next last is convention of materiality. Okay, so these are the several accounting conventions. So now discuss it briefly about these. Convention of conservatism means what? According to this convention, accountant must adopt the policy of playing safe. Okay, the accountant must adapt this safe position and follow the rule, anticipate no profit but provide for all possible losses. Means what? So the accountant must take a provision for all possible or expected losses, but unearned or unrealized profits must not be included. Okay, the accountant must make what will be not included, any possible losses or any expected losses, but unearned means what? Not unearned. Unrealized profits means what? Like losses. So that unrealized profit must not be included. When convention of conservatism is used, inventory is valued at a lower price, either at a cost or market price. So that provision is made for bad or doubtful debts. Okay. Suppose inventory include is valued at a lower price. For example, on this date you have to purchase an inventory is suppose 20,000 rupees, but after completing any 2 or 3 days on this 31st December, so that inventory market price is 30,000. Which cost you have to include it in the books of accounts is whichever is lower, then you have to record it in the books of accounting. So that is the concept of conservatism. Okay, when convention of conservatism is used at a inventory is valued at a lower price. Okay, either suppose on this date, so this is first example. So on this date at the end of the year, while we recording that books of accounts, we record what? Whichever is the lower, that we have to record it in the books of accounts. Either it is an a cost to price, it is an a market price, or else on 28th December, so that price is 30,000 will be there, and that market price is 28,000 will be there. Which price you have to record it in the books of accounts according to this conservatism concept is you have to record it 28,000, either cost price or market price, whatever it is, you have to record it what? Which is the lowest amount, that only you have to record it in the books of accounts. This is a concept of convention of conservatism. Okay, so the main objective of this convention is to misrepresents the true financial position of the company in order to show lower net income and understated assets and liabilities. So according to this convention, the financial position is not getting truly. Why? Because we have to record it whichever the price is lower, so automatically our net income will be lower, and any assets or liabilities will be understated. Okay, so this is a concept of, so this is a convention of conservatism. Okay. Next, second one is convention of full disclosure. Convention of full disclosure. So that according to this convention, the financial statements must provide the complete and true information about the company. Okay, our financial statements are there. What are that financial statements? Trading account, profit and loss account, and balance sheet. Now, so that financial statements must provide the complete information and true information about the company. It did not give any false statements or false information. So a convention of full disclosure, according to this convention, the financial statements must provide the complete and true information about the company. So the financial statements must be prepared in accordance to the laws so that it can be effectively used by proprietors, present and potential creditors, investors. So this convention of full disclosure add notes to the accounting statement. So under this, what it gives detailed information and complete information is given about the company. Okay. Next is convention of consistency. Convention of consistency. See here, consistency in the name itself is there. Consistency, constant. Okay. Next convention is what? Convention of consistency. So this, according to this convention, a company must follow the same accounting practices and methods from one period to another period. So, in generally, when we are to prepare the final accounts at the end of each year, we prepare final accounts. So, under that, when we anyway we have to prepare final accounts, we have to maintain one method or we have to maintain one principles or accounting practices. Any method we have to follow, that method will be followed up to a several years. Okay, that is, that accounting must follow same accounting practices, and any methods are there, that methods are followed from one period to another period. Any changing the accounting practices would result in several problems in calculating the true financial position of the company. Suppose you have to 1 year one method following, and second year another method following, and third year another method following. Like these several practices you have to follow, it affect the true financial position of the company. Okay, so we want most what financial position getting truly, but whenever we have to follow different methods in different years, it would be difficult or it would be incur several problems in calculating the true financial position. Suppose suppose for any calculating, depreciation follows a straight line method in 1 year, and suppose on one asset we have to follow depreciation. So in that depreciation method, two types of depreciation will be there now. One is straight line method and second one is diminishing balance method. So whatever you, on these two methods you have to choose one. Suppose you have to depreciate it on the straight line basis, so up to at the end of the year that machine life goes to zero, then you have to follow that method only. It is good to the company and it is easy to the calculation for the financial position. But 1 year you have to follow straight line method, and another year weighted average method, next straight line method, next weighted average. Like this you have to follow. It become difficulty to evaluate and compare the true financial position of the company. So if any advanced technique is introduced, it must mention clearly in the financial statement. So anyway, any method you have to follow, that method you use for a constant period of an a time. Okay, this is a convention of consistency. Next is convention of materiality. Okay. Next is what? Convention of materiality. Material details, products. See here, According to this convention, the accountants must give importance to material details. Okay, who is the person under this mainly doing? An accountant. Okay, accountant must give importance to material details and must avoid unnecessary and unimportant details. Only the it must give importance to what? Only the material details, and it must avoid any unnecessary unimportant details. So materiality means what? Materiality means the characteristic or attaching to a statement. Okay, materiality means what? It is any one type of an a statement or facts or item whereby its disclosure or method of giving it expression would be likely to influence a judgment of a reasonable person. Okay, an accountant must give importance to the material details. Okay, these are the conventions. Okay, accounting conventions. Okay, next is accounting standards. Okay, after completing accounting concepts convention, and next topic is accounting standards. Accounting standards. So under this accounting standards, what is the meaning of these accounting standards? What is the importance, need, what is the scope, and list out the accounting standards. Okay, see here first, who brings these accounting standards? Who brings these accounting standards? We know that gap. Okay, gap. What is the full form of gap? Generally accepted accounting principles. Okay, gap full form is generally accepted accounting principles. Generally accepted accounting principles. GAP aims at bringing uniformity and comparability in the financial statements. Uniformity means what? Constant. Okay, comparability. We have to compare with this year financial position to the previous year. Which aims at bringing uniformity and comparability in the financial statements. So it can be seen that at many places Gap permits a variety of alternative accounting treatments for the same item. For example, different methods for valuation of stock give different results in financial statement. So under this valuation of stock or valuation of materials, under this we have several methods are there. That is, one is FIFO method, LIFO method, weighted average method, simple average method. Okay. So in different methods, so four methods are there. Under these four methods, we have to find out that closing stock. Now, so each method, each closing stock getting different values, so that this permits a variety of. Okay. So this such practices sometimes can misguide intense users in taking decisions relating to their field. So, keeping in view the problems faced by many users of accounting. So, we have internal users and external users. Internal users are proprietors, managers, employees, and that external users are creditors, investors, public, outsiders, foreigners. Okay, so the under this different taking decisions relating to their field. So keeping in view the problems faced by many users of accounting, a need for the development of common accounting standards was aroused. Okay, so that for this purpose, ICAI, that is Institute of Chartered Accountants of India, which is also a member of International Accounting Standards Committee, had constituted this Accounting Standard Board ASB in the year 1977. Okay, so this Accounting Standard Board identified the areas in which uniformity in accounting was required. After detailed research and discussions, it prepared and submitted a draft to the ICAI. So, after proper examination, ICAI finalized them and notified for its use in financial statement. So, which is constituted is ICAI. Full form is ICAI is Institute of Chartered Institute of Chartered Accountants of India, which is also a member of which is also a member of IASC. IASC full form is International Accounting Standards Committee. Okay, IASC full form is International Accounting Standard Committee. Okay, so had constituted this accounting standard board. Accounting Standard Board. Accounting Standard Board, that is what ASB. In which year? Constituted in which year? In the year 1977. Okay, so that ICAI and IASC had constituted this accounting standard board in the year of 1977. So this accounting standard board identifies the areas in which uniformity in accounting was required. After detailed research and discussions, it prepared and submitted a draft to the ICAI. Okay, so this is in this year accounting standard board are constituted. Next is meaning of accounting standards. Okay, meaning of accounting standards. Accounting standards are the written statements. Okay, so these accounting standards are the written statements consisting of rules and guidelines are issued by the accounting institutions. For what purpose we have to follow that rules and guidelines? For the preparation of financial statements. Okay, under these financial statements we prepare trading account, profit and loss account and balance sheet at the end of every year. Under these accounting standards lay down these terms and the conditions of accounting policies and practices by way of codes, guidelines and adjustments for making the interpretation of the items appearing in the financial statements easy and even their treatment in the books of account. Okay, so first write down this meaning of accounting standards. Okay, meaning of accounting standards. Meaning. Accounting standards are the written statements it consists of rules and guidelines issued by the accounting institutions for the preparation of uniform and consistent financial statements Okay, so for accounting standards, it is to be useful tool to enhance the corporate governance and this responsibility two criteria must be satisfied as first one is a standard must provide a generally understood and accepted measure of the phenomenon of concern. A standard must provide a generally understood. Okay, so in accounting standards we have 32 accounting standards will be there, so that standard must be generally understood and the accepted measure of this concern. Next, second one is a standard should a standard should significantly reduce the amount of manipulation of the reported members and is likely to occur in the absence of the any accounting standards. Okay, so several importance will be there under this. Write down that importance. So that another is importance. First one is serve as guide to the accountants. Second one, act as a dictator. Next is serve as a service provider. Next, act as a harmonizer. Okay, the accounting standards facilitates uniform preparation and reporting of general purpose financial statements published annually for the benefit of shareholders. It will be benefited to the shareholders, creditors, employees and public at large. So they are very useful to the investors and other external groups in assessing the progress and any prospects of alternative investment in different companies in different countries. So on the basis of this discussion we can say that the accounting standard or guide, dictator, service provider and a harmonizer in the field of accounting process. So that first one is serve as a guide to the accountants. Accounting standards serve the accountants as a guide in the accounting process. Accounting process means first recording transactions in journal. Next is posting the transaction into the various accounts for find out the closing balances of the accounts is an ledger. Next is trial balance. Next, preparing trading account, profit and loss account and balance sheet. This is the accounting process. They provide basis on which accounts are prepared. Okay, so this is an serve as a guide to the accountants. Next, second one is act as a dictator. Accounting standards act as a dictator in the field of accounting. Like dictator, in some areas, accountants have no choice of their own but to optimum for practices other than those stated in the accounting standards. For example, anyway, we have to prepare one statement. For example, we prepare balance sheet statement, so that balance sheet should be prepared in the prescribed format. Okay, under this, while preparing the balance sheet, we have two pro formas, that is vertical and is horizontal. Okay, so depend upon these two pro formas, we will prepare balance sheet. So under this act as an dictator, sometimes the accountant have no choice of their own, so that an accountant has to follow the companies whatever they told. So depend upon this, an accountant prepare the statements prepared in the format subscribed by the accounting standards. Okay, the next one is serve as a service provider. Okay, next one is serve as a service provider. Another is accounting standards comprise the scope of accounting by defining certain terms, presenting the accounting issues and any specifying standards, explaining numerous disclosures and implementation date. So there's accounting standards are descriptive in nature. Okay, serve as a service provider. So at the end, after completing the preparation of this balance sheet, it will be giving some interpretation. Under this interpretation, we have to write, okay, this much this this much profit is coming in this year, while comparing to the previous year the profits are increased by 20%. Okay, like this we have to giving in a explaining in numerous disclosure and the implementing that date. Okay, this is a serve as a service provider. Next is act as a harmonizer. Okay, act as a harmonizer means accounting standards are not biased and bring uniformity in accounting methods. So several accounting methods are there, and under each method we have to follow standardly or constantly we have to follow only one method. They remove the effect of diverse accounting practices and policies. They remove the effect of diverse accounting practices and policies. So on many occasions, these accounting standards develop and provide many occasions these accounting standards develop and provide solutions to specific accounting issues. So it is clear that whenever there is any conflict on accounting issues, that time accounting standards act as a harmonizer and that facilitates solutions for the accounting. So this person giving solutions to the accountant facilitates solution for accountant. Okay, so these are the importance of accounting standards. Okay, so in which year these accounting standards are constituted? In the year of 1977, ICAI and IASC, these two forms and constituted this accounting standard board, that is ASB. Okay, so this is our today's class.